Yeah. Good morning, everybody. Good morning, everybody. This is the Live Market Open for Friday, May 27th. Happy Friday, everybody. Good morning, Sinatra. Good morning, everybody here in the room, in the chat. Today, as always, we'll talk about recent developments in markets, cover various charts and levels, discuss the next 24 hours, well, less than 24 hours. As always, on Friday, we'll do a preview for next week's events, which is a very busy week, and of course answer your questions. So if you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fx3-forex-live-video. So what's going on in markets? Well, a few things that are sort of in the background. Oil prices, WTI crude oil, managed to flirt with the $50 mark, but never went too far. It's just under this line at the moment. Things are balanced. In the Brexit polls, it looks a bit tighter, so perhaps some bit of good news for the Leave campaign, but no significant change. Still a significant lead for the Remain campaign. Remain. We had the G7 meetings in Ise-Shima, Japan. Very nice pictures of all the leaders there. They announced that they want to help global growth, do more structural reforms, boost growth. Very sort of big words, but nothing of significance. So good morning also Luca, good morning Ed. In Japan also, Shinzo Abe, he was a bit more worried about the situation in emerging markets, about global growth, and probably Japan will delay the next increase in the sales tax planned for April 2017 for next year. Specifically, David Cameron, the British Prime Minister, managed to push the warning about Brexit into the statement of the G7 meeting. Okay, so another international body, the G7, also warns David Cameron about, also warns Brits about voting to leave. Okay, anyway, they can help global growth by cutting taxes or by investment. And Germany has an austerity policy. Europe in general has an austerity policy, but it's not only taxes, it's not only government spending, it's not only reforms, it's probably everything together. And, well, it's a very long story. Anyway, as always, nice statements, nice photos, nothing really of significance. Okay, maybe we'll see something in the future, but I have lots of doubts. In terms of data, yesterday we had lots of data. In the UK, GDP growth in the fourth quarter over quarter in Q1 came out at 0.4%, exactly as expected. And the year over year was a small miss, 2% instead of 2.1. It didn't rock the boat too much. The big event yesterday was durable goods orders, so the headline was much better than expected, 3.4. The general core figure was also better than expected, but the core figure, when I talk about core in durable goods orders, I'm talking about ex-defense spending and non-air. So everything that is not military and not aircraft, that actually fell 0.8% instead of rising 0.3%. So that left us sort of with a mixed picture over there. So, or a sour taste in our mouths. Okay, so it wasn't that good. Other figures did. So the US dollar began initially reacted by rising on the headline figures, but then when this core figure came out, when markets digested it, and the dollar retreated. But that didn't last too long either. First of all, jobless claims were better than expected. They continued their slide from the highs, so it's good news for the labor market, 268,000. And then at 90 minutes later, we got the pending home sales, not the most important figure, but it's sort of been a winning streak for housing figures. Earlier this week, new home sales really beat expectations, and last week's existing home sales were good, so also pending home sales came out better than expected, and that sort of balanced things out for the US dollar. We'll see the charts shortly. And Japanese inflation overnight missed. Okay, so according to the Tokyo figure, drop of 0.5 in core inflation. Okay, really bad news for the Bank of Japan. And also the Bank of Japan's sort of special figure, it also disappointed core inflation by rising only 0.9. It already stood on 1.1. So no matter how you look at it, it came out worse than expected. Of course, this raises the speculation that the Bank of Japan will act. But as we've seen, their ability to act is, they have an ability to act. Their ability to weaken the yen, to boost inflation, has not been successful at all. Indeed, Luca, weak CPI again in Japan. Everybody expects the Bank of Japan to do something. We had the government wants to postpone the sales tax to, basically forever. And they tried to get the G7 on board to talk about disorderly FX moves, but it was sort of a weak statement also about that. So, look, Japan is not doing that. Things aren't that bad there, and the unemployment rate is low. It's a very sophisticated, developed country. So a little bit less growth, a little bit more deflation. I don't see it as a big tragedy, but of course, Abenomics doesn't really work. The Shinzo Abe's plans are not really moving forward. Anyway, good morning, Ramon. Good morning, Sinatra, once again. Good news for the U.S. military economy is bad news for the U.S. since they send out all their crap to Eastern Europe and to raise further tension with Russia. I agree. Military spending helps very few people. In factories in the United States, but basically military spending is destructive stuff. So they're not manufacturing real things that contribute to the wider economy, to the wider public. Good morning, Fabian. Okay, so let's before I move to today's events, let's talk about the charts. We're here to talk about foreign exchange. So this is what we had yesterday in euro dollar. We did see a move. This is this bar here, this drop and then rise, is what we had with the durable goods orders. Initially, we've seen the dollar strengthen and then euro dollar move higher on that disappointment. So we've seen the pair rise to a previous line of resistance, 112.15, 112.50, and then drop back down. This morning, once again, 111.80. It's becoming a bit harder to draw some lines here on the euro dollar chart, but the wider levels are 111.30 and 112.50. High resistance 113.35 and lower support 110.70. You're welcome, Sinatra. Good morning, Geddes. Good morning, everybody. Anyway, euro dollar again choppy this morning, sliding once again, 111.30, 112.50. Pound dollar didn't manage to break that early May high of 147.70. Okay, we did move a bit higher yesterday, and then we dropped back down, still battling. After a battle with the 147 level, we're back to now battling support here at 146.50, dipping a bit under this line. Further support 145.80, 145, 144.40. On the top side, this May 3rd high of 147.70 works as resistance. Okay, dollar yen. Well, it's hard to see the Japanese miss on inflation having a positive impact on dollar yen, negative impact on the yen. Things are very well balanced over there. The wider range, 108.25 to 111. And we're talking here about 109.40 to 110 is the more narrow range. Things are becoming a bit more choppy here. A few comments here. Sinatra says, imagine we used all that material and technology for something strengthening infrastructure. Yeah, I certainly agree. Some countries like where I'm here in Spain don't need too much in infrastructure investment, but small companies for innovation, they need more investment, not for housing. And other countries like the United States, like Germany, certainly need sort of a shakeup of infrastructure. It says Japan is smiling and glowing with Fukushima radiation that contaminates 24/7. The government lies about the true levels. Yeah, there's been a scandal over that issue as well. In Fukushima, I think it's still 5 years after, it's still a very contaminated zone, a no-go zone. And luckily for Japan, oil prices are low, so it has other sources of energy. Anyway, it's quite a sad tragedy. So many people were killed, and the consequences are still suffered by the Japanese. Yeah. So let's go back to the charts. Yeah, Japan. Talking about Japan, probably delay of a sales tax, perhaps new elections. Abenomics doesn't look so good. But I'll mention that Fukushima disaster happened in the reign of the previous government. But yeah, I think both governments are not doing too much about that. Let's continue with dollar CAD. Here we are seeing bounce back up. So maybe we should update this support line right here. 129.10. Sort of the swing low for dollar CAD. Yesterday we did have oil prices move to the upside. This supported the Canadian dollar alongside the not so dovish Bank of Canada on Wednesday. But oil prices didn't move too fast, and the US dollar returned to its strength. And now dollar CAD once again above 130. Let's see if this move is sustained. Further resistance 130.80, 131.70. On the downside, we have 128.30 and very, very strong support at 127.50. Okay, let's jump to oil prices. So currently in 49, we've seen this flirt above $50 a barrel. Again, it's a very important level because it's a psychological level. Real resistance is around 51. Brent crossed the $50 mark beforehand. Anyway, oil prices are easing at the moment. It's sort of 2 steps forward, 1 step back for oil. This week, inventories showed us that US production continues falling, and that's bullish for oil. But there are lots of doubts. My doubt is, I think that with high US production, with the flexibility of the shale industry, you could see US production ramp up once again. Okay. Another comment here. Is it core PCI, asks Luca, coming out today? That's the Fed preferred inflation measure. No, it's coming out on Tuesday, May 31st. What we have today is the quarterly core PCI that comes out alongside the GDP figure. So that's the figure accompanying the CPI release for the first quarter. We'll get the core PCI price index on Tuesday, and that will be the figure for April. So that's a more fresh figure. So yeah, it is confusing, but it's not. The most important figure today is the GDP one, okay? Another comment here, euro dollar can't get a foothold above 112, with euro pound near its neckline at 76.50. Euro downside pressure may resume soon. Yeah, I would focus on the GDP, not on the PCE, but yeah, I see lots of pressure on the euro. We saw the euro did not manage to gain ground. Okay, so yeah, hard to settle above 112. Certainly agree. And also euro pound looks weak. Okay, another comment here from Sinatra. And they just have too much reason to lie about the public about the secret nuclear weapons program. Okay, thanks for that. Yeah, Global Research, it's an article from 2011, just after the earthquake. Yeah, well, there have been some lies about that. I'm not sure about this thing, but anyway, let's continue. Australian dollar, 72.14 at the moment. Very balanced here, very choppy. 73 is a strong level of resistance. Low support at 71.40. The Australian dollar has been under pressure with weak capital expenditure, not so impressive Chinese industrial profits. This morning, not an important figure from China, but anyway, Australian dollar isn't going up anytime soon. At least that's what I see. Next week we'll have GDP from Australia and other figures, of course. Anyway, it's very well balanced in range. Kiwi dollar, 67.20. It dipped under 67 earlier this week, but managed to rebound. Once again this morning, it begins the morning with a slide. 67 still is support, and 68.40 is resistance. Dollar Swiss, around the same levels, 98.50 and 98 working as support, currently closer to 99, and not really attacking the line of parity up there, okay? Euro Swiss, which did make a move to the upside in the past few days, well, in the Last 24, 48 hours, it's been sliding, bouncing above the round number of 110. 112 is very strong resistance. I would say 108.50, 108.60 is some kind of support. Remember, the S&B is active in this pair. Euro pound, as you mentioned before, 76.50. Yeah, that's a line of, I'm looking a bit more at 76. Yeah, 76.50, sorry. I'm also looking at 76.50. Looks as a very good separator of ranges, so very nice technical behavior here on Euro pound. 77.40 works as resistance, and 75 is low support. I agree that the euro has a hard time recovering against the pound, a hard time recovering also against the dollar. Let's continue with more euro yen. Yeah, 123 works nicely as line of resistance. Currently 122.66. Low support remains at 121.65. But I mean, it's a very strong support line, but the pair is not, the cross is not challenging this line really anytime soon. 124.20 is high resistance. The dragon, the pound against the Japanese yen, tackled resistance yesterday, or Wednesday, sorry, at 162.50. Higher resistance 163.80. Strong support at 160. It seems that the pair, this cross does manage to settle above the 160 line. Further support there at 158. Okay, so that's the roundup for usual charts. Comment here from Ed. France, UK profit from Japan nuclear industry, and Japan is reprocessing plant for nuclear material. Yeah, yeah. Everybody's making money on nuclear activity. And Sinatra says it's the global economy. Everybody has some kind of interest somewhere else. They want to sell their technology to Japan and not the Russian one. So, yeah. You witness a global nuclear renaissance. We did have this nuclear renaissance before the Fukushima disaster. Also, Angela Merkel, German chancellor, supported it. After Fukushima, she made a U-turn. France didn't do the full U-turn, so we're a bit sort of after this peak nuclear renaissance, but I would say that renewable energy is becoming a bit cheaper, but we still need baseline technology, baseline electricity. In Germany at the moment, as far as I know, correct me if I'm wrong, it's supported more by coal instead of nuclear, which is also contaminating. Uranium is somewhat insider tip on many investment newsletter. Okay, I didn't know that. Anyway, uranium nuclear investment was hit by the Fukushima disaster in 2011. Maybe now it's rising once again, so we'll keep an eye for that. Okay, let's talk about the events for today. Today's calendar is not that busy, but I think it has a few sort of key events. Well, the biggest event on the calendar is US GDP at 12:30 GMT, 2:30 here in the old continent, 1:30 in the UK. So this is the main figure. No. Why does it show this? Oh, what we should look for is this one, annualized, sorry. So last time we had a report of 0.5%. This is annualized, okay? This means that if you compare it to the UK, 0.5 translates to 0.1, or to Germany, or to other countries. So quarter over quarter was only 0.1, but in the United States, we're always talking about annualized, it was 0.5, and now we're expecting an upgrade to 0.9, because we had more data that supports this upgrade, okay? This is the main figure to watch. It's a bit old, okay? It's Q1, not Q2, but it's still of high importance. We did see big changes in Q4 from initially, I think, 0.5 to finally 1.4. Small upgrade is expected here. If we have over 1%, it'll be encouraging. If it'll remain around 0.5 or even lower, it'll be, of course, negative. Alongside GDP, I should mention a few other things to watch out for. So it's not only the general number that is important, it's also what makes up GDP, what makes up growth. So If it's investment, it's good growth, okay? We learned this week that investment, at least for Q2 in the United States, was not so good, okay? Because of the core durable goods orders. Another good type of growth is personal consumption. That shows more confidence, and usually when consumers begin buying, they're expected to continue buying. So that's a major part of the US economy. What is bad growth? Bad growth is government spending, because that's sort of artificial and is not sustained. And inventories. When inventories fall, when they take away from growth, they're expected to rise in the next quarter, so it's not that bad. When growth is based on higher inventories, it's bad growth because it'll come back to haunt us in the next quarter. Okay, so watch out for those revisions. But of course, the headline figure is the most important one, so a small rise from 0.5 to 0.9 is expected. It's one of those 6 events that I mentioned yesterday in the towards the June rate hike. So the first one was the core durable goods orders, which was a miss, the core figure. Today we have the GDP number, which is the second in its importance, and next week we have the core PCE. We do have also around this figure the personal consumption expenditure, the PCE, but that's quarterly, again, not that important. Of course, the higher the better, undoubtedly, but it's not the one that the Fed focuses on. At 2 p.m. GMT, we have the revised figure for the consumer sentiment by the University of Michigan, Reuters. That's expected to, as far as I see here, a small downgrade from 95.8, which was then a beat on expectations, to 95.4. The usual rig count, Baker Hughes, not that important. Real production is more important than the number of oil wells. And at 5:15 GMT, 7:15 here in the old continent, Yellen is going to talk. But let me stress, this is probably going to be a non-event. I'm not saying it only because I'll be already in weekend mode, and I guess most of you as well, but the speech in Harvard University is expected to be really more academic. She will take questions, but it's probably not going to be about monetary policy. The big Yellen speech is on June 6th. That's next Monday, okay, in 10 days' time, and not today. It doesn't mean she can't surprise markets, and it's going to come in a time of thin liquidity when in London people are already at the pub. But so it's certainly an event to watch out for. I mean, it could move markets, but most people, including myself, expect a non-event. If she does talk about monetary policy, my suspicion is that she is still extremely dovish, and she will not give us the big hint, the June. She will not give us a thick hint or not even a small hint about June. She will acknowledge improvement, express some worries, and keep all the options on the table. The bigger event, as I mentioned, is June 6th. By then, we'll have the NFP report, the core PCE, and of course, other Fed speakers, okay? So, yeah. A few more questions here. Luca is sharing a chart with us. Let's begin from the top. Okay, that's a chart of dollar-yen. Squeezing here and about to explode. Completing H and head and shoulders pattern, instead of hitting 106, you'll be able to play a whole new game. Okay. The ranges have been narrow and choppy. Let's see if we have a break to the upside or to the downside. Of course, the Bank of Japan would like to see a break to the upside. The United States, not so much. So, yeah, the low this year was 105.50, and the highs, well, 120.150. When you're expecting a big squeeze to 110.50 or a big squeeze above 110.70. Yeah, 110.70 has certainly been a high. Let's see if we move above that. 116 used to be a strong line on the top side. On the downside, we have 108.40 and 107.65. Pipe to pass through Greece to EU. What is your view on S&P? Only 3 business days before the end of the month. S&P is so balanced and so not going anywhere. We're already a year. It's been the 1-year anniversary since we reached the highs on the S&P. Okay, it was in mid-May. Since then, we've gone close to 1800 and back up again. Now we're getting closer to the highs. The highs have been 2140 almost. I don't know. I think corporate profits have been negative. I mean, have shown a fall. Not so good news. On the other hand, the market does have support from the Fed. Yeah, we could see some scrambling, last-minute scrambling. That has an effect also on dollar-yen. I see markets as very choppy, and I'm not that optimistic on US stocks, but I don't focus on stocks. The big adjustments will probably be seen on Tuesday. So Monday is a holiday in the US and in the UK. Okay, in the UK it's spring holiday. In the United States it's Memorial Day. And that leaves us with one last day in the month on Tuesday for the last-minute scrambling in stocks and in currencies and commodities and everything, okay? Everyone in their cat is shorting 110.50 but keeps making the higher lows. Yeah, I think in dollar-yen it could be, sorry, dollar-yen. Yeah, maybe we're seeing here higher lows. For me, it's very choppy. Good morning, Sirik. Had some great charts this week, Sirik. Watch for big squeeze. Yeah, okay, so answered all those comments. Let's see if we have any big move today in markets. Nope. These are the chances for a rate hike. Currently, well, let's refresh it just in case, but yesterday we did see a fall in rate hike expectations to 26% for June. Let's see. Yeah, well, it's the same, so it's probably updated. Around 27% chance of rate hike in June. It was already around 34%. And for July, something like 57%. Okay, so it's markets are still pricing in a rate hike in July. Remember, in July there's no press conference, but the Fed could call one. The advantage in July is that they already have fresh GDP figures for Q2, and that we'll have the Brexit referendum behind us. At the moment, let's see if I can get my FT. I like what the Financial Times did here. 46% against the Brexit. Should I stay? And 41, should I go? Yeah, they have here full charts. Yeah, so the latest poll from BMG Research showed deadbeat race 45% for leave, 44 for stay. On the other hand, Survation showed 44.38 for stay. As I mentioned in the past, you should watch out for the same. Look at the same company, okay? So BMG Research in the past showed 45% for leave, and now they're showing, well, 45.41, sorry. Now they're showing 45.44, so BMG Research are showing growing chance of stay, okay? The trend, you should look at the trend, not at the absolute, only at the absolute figures. Comments here. The thing with stocks is financials are gaining on rate hike expectations. Banks make more money. Energy sector is gaining on oil. These are probably the biggest sectors for the market with technology. Yeah, higher oil means that's easy to understand, of course. Banking, it's much more complicated because some banks have very complicated financial instruments and playing lots of games. Technology, well, technology is more Fed technology companies doing well, good news. Not doing well, bad news. It depends more on the fundamentals of the company. Question here by Fabian: what's your bias on euro dollar today? Do you see it lower or higher at the end of the day? My bias is negative on euro dollar. I believe that the momentum is still with the US dollar, and the euro is not going anywhere fast. I don't think the ECB is going to introduce new policy, but the trend remains to the downside. Euro dollar remains pressured. There's too much going on in Europe. Remember that the danger of Brexit is not only the UK leaving the EU, but the EU being left by the UK, and perhaps the beginning of the end of the European Union. So that's sort of the big picture. And and so much political discontent here in the old continent that I don't see things as going too well for Europe at the moment. In general, I think that a small beat on GDP, or an okay GDP figure, I mean, as expected, which is better than last time, should be enough to support the dollar and push euro dollar a bit lower. Perhaps not a big move, but a bit lower. Okay. Consumer is doing well too. Look at US retail sales. Yeah, that was a really great report. The US retail sales that lifted the odds for June rate hike. Lucas says, so my take is not so evident in the S&P will weaken. Maybe another one of those stealth rallies, slow and steady. Maybe, yeah. The S&P rally was considered one of the most hated rallies in history. Okay. Everybody asked, where's the fall? Where's the crash? Okay. Cyril shares the chart with us. I have my top on 2113. Okay. Let's share it with everybody here. Thanks, Cyril. Yeah. So we have some limits to the upside on, as you show us here. Okay, yeah, things are a bit stuck there. Okay, so thanks, Cyril. Thanks everybody for sharing charts, comments, questions, as always. Let's begin with the preview for next week, because I think it's going to be a long one. So this is the preview for the week of May 30th to May 30. Well, sorry. This is the preview for May 30th to June 3rd. Okay, let's begin on Monday. On Monday, we'll probably have lower volume. It's a holiday in the United Kingdom and in the United States. Not a very important holiday, but markets are basically closed. Memorial Day and the spring holiday in the UK. Don't worry, we'll be here in markets. We'll still be open. Forex never sleeps. We'll have somewhat lower volume and a chance to analyze the movements before the bigger events later on. Tuesday, as I mentioned beforehand, it's the last day of May. Sell in May and go away. Not so fast. Anyway, we have last minute adjustments and a few important figures. So we have Eurozone CPI on Tuesday, and it's an opportunity to go back to Monday and mention that on Monday we have the German CPI, which basically, well, it shapes the Eurozone CPI, it feeds a lot into that. Okay, so Tuesday is going to be the Eurozone CPI. Then Core PCE Price Index, the Fed favorite. That's the important one to watch. The year-over-year one is more important. The trend is important. We've seen the core CPI move a bit to the downside, slipping gradually from 2.3 to 2.2 to 2.1. Let's see if we have another fall. Also in the core PCE one, that will lower the chances for rate hike, or if it stabilizes or goes higher. Usually they run in tandem. Okay, there is a gap between them, but the trends are similar. We also have Canadian GDP. This will be the GDP release for April. So it will be it's a monthly one, the first Q2 GDP. Eyed also elsewhere. On Wednesday, busy day, first day of the new month, June 1st, Chinese PMIs, Purchasing Managers Indices. In China, we have also in the UK and also in other places, but in China, it's the official one, the government one, and then the Caixin Manufacturing PMI, which is the independent one. Let's see how it moves things. It's important for Australia, and there's no time to rest for those awake at night. Have both Chinese PMIs and the Australian GDP figure for Q1. Australia takes its time with GDP figures. Let's see if the economy is doing well, thanks to housing, thanks to domestic demand, or not so well because of the Chinese slowdown. And on Wednesday, we also have the first hint for the PMI. First hint for the non-farm payrolls. The ISM manufacturing PMI in the United States, the market one has been a bit weak. Let's see if the ISM one follows. We also have the milk auction, bi-weekly milk auction in New Zealand, important for the Kiwi. So a very busy start of the new month. Okay, we do not have crude oil inventories on Wednesday. It comes on Thursday because of the holiday. But on Thursday, we have bigger events as well. Not only the oil inventories, we have OPEC meetings. Probably not going to agree on anything. OPEC is long dead in the water. I mean, they don't make decisions. Saudi Arabia does whatever it wants and the others follow. Well, also Iran, now that it's back online, is pumping lots of oil. They'll continue with the same trend. So I believe that it could push oil prices lower, but maybe it's already priced in. Another hint for the non-farm payrolls, the ADP non-farm payrolls coming out on Thursday. This time, usually it comes out on Wednesday. So we've seen a good correlation last time between the ADP non-farm payrolls and the government figures, the BLS one on Friday. So perhaps it'll have more importance this time, even though ADP is only for the private sector. Okay. And of course, the Draghi show, ECB rate decision on Thursday, June 2nd. ECB meets only 6 times a year. This time we have it coming all together in the first week of June, also with fresh forecasts. Okay, so Mario Draghi and his team, Hawks from the Bundesbank and the Doves from other places, not expected to change policy. Remember, the interest rate is at 0%. Main lending rate, the deposit rate is at minus 40 basis points, minus 0.40, and the QE program is in full swing. We're going to have more implementation. We had an implementation of the rise from 60 to 80 billion euros per month, money printed out. In June, we're going to have the TLTROs, the targeted loans, basically paying banks to lend out money to the real economy, and the ECB is going to begin buying corporate bonds. So these are not new decisions, but the implementation begins in June. Maybe we'll hear more details about that. More forecasts. Does the ECB see things in a bit more optimistic way? Probably not. That's an important event, of course, on Thursday, even though policy is not expected to change. Okay, very, very busy week. Opportunity to mention, we'll have live coverage on FX Rate. I'll be joining Valeria Bednarik and Mauricio Carrillo for the ECB decision and also for the GDP today. Going back to the calendar, we have on Friday the non-farm payrolls. As always, the king of Forex. This time, perhaps a lower gain in jobs is expected, which is not necessarily bad because, you know, some people can say that it means that the United States is getting closer to full employment. And and of course, wages are in focus because that's the source of core inflation. Also on Friday, coming after the non-farm payrolls, 90 minutes later, is the ISM non-manufacturing PMI. The services sector, even though it does not serve as a hint for the NFP, it is still of high importance because it is sort of a forward-looking indicator for the wider US economy. All in all, a very, very busy week, starting with the holiday on Monday, but we still have German CPI and other figures. Tuesday, the last day of the month, scramble to close positions, and we have this important Fed favorite. On Wednesday, lots of figures, manufacturing PMIs. Thursday, Draghi, OPEC, ADP, and Friday, the non-farm payrolls. Okay, so a very busy week next week. Okay, before we do the wrap up for today, see here a few comments. Yohay never sleeps. Cable flying. Let's look at the pound dollar chart. Well, 146.82 is it is for something like 40 pips to the upside on the pound. Let's see if we have some figures moving cable at the moment. I haven't seen anything, but no, can't see anything significant regarding the pound. Maybe a new poll came out. I'm not sure. I don't have information about that, but cable has been moving quite a bit, which is always nice to see, isn't it? With with euro dollar hardly doing anything. Well, we did have some movements. Also, euro dollar is sliding at the moment, but cable is certainly a bigger market mover. So the US dollar is strengthening this morning, also against the yen. So I wouldn't say big moves, but we're seeing US dollar strength across the board. Okay. Yeah, until it'll consolidate. Yeah, there's always a new pull around the corner. Yeah. Okay. Well, only the Aussie is a bit more stable. Yeah, the biggest move is in cable, indeed. Okay, so we're already 40 pips above the lows. We reached the range of 50 pips on cable. Okay, let's continue to the wrap up for today. So this is the wrap up for the live market open for Friday. Happy Friday, May 27th. We had oil flirting with $50 per barrel, but retreating. Lots of hesitation over there. The Brexit polls are still showing a better chance for the Remain campaign, but slightly tighter figures. The G7 warns on Brexit on Cameron's request, and also the G7 calls for boosting growth, whatever that means. Very empty statement. In Japan, these leaders are meeting in Japan, and Japan is expected to postpone the next hike of the sales tax. Lots of figures came out yesterday. UK GDP more or less as expected. Durables goods orders, and the headline figures were good, also the core figure, but the core figure does not look quite promising. Other US figures were positive, and that balanced out the picture. It does help the US dollar at the moment. Jobless claims and pending home sales. Japanese inflation misses on the Tokyo figure, the national figure, and even the special Bank of Japan figure, which is still positive, but is slowing and dropping below 1%. Higher speculation that the Bank of Japan will do more. Today on the agenda, first and foremost, US GDP in an upwards revision expected from 0.5 to 0.9. Of course, this is sort of the bottom line figure for the US economy. It's for Q1 and it's the second release, so it's not as important as the first one, but certainly the biggest event for today. We have revised US consumer sentiment at 2 GMT, and at 3:15, it's 5:15 GMT. I should fix that right here. We have Janet Yellen speaking at the very end of the week, but probably not about monetary policy. Don't expect too much from that speech by the Fed chair. Her bigger speech is on June 6th. That's next Monday, in 10 days' time. Okay, let's look at the charts. We are seeing a stronger US dollar at the moment. Euro dollar slipping under 111.80, which worked as some kind of resistance. The bigger lines to watch are 111.30 on the downside, 112.50 on the upside. Pound dollar, 146.73 at the moment. Pound is moving to the upside. Well, actually, sorry, I was a few. I confused you earlier. We are seeing the pound stand out while the dollar is moving higher. So at least we are seeing some movements, but the pound is sort of swimming upstream, if you wish. And anyway, 147.70 is the May 3rd high, support 145.80, 145.10. Sorry for the confusion earlier. Dollar yen moving a bit to the upside, very limited range there. 110.70 perhaps some kind of resistance, 112 strong resistance, low support 108.25 and 107.65. Dollar CAD recapturing the 130 level, high resistance 130.80, 131.70 support 129.10 and 127.50. Aussie dollar extremely stable at 73, strong resistance, low support at 71.40. And Kiwi dollar 67.24 at the moment. 67 works as support and 68.40 as resistance. So what we're seeing at the moment is the pound is stronger across the board. Second in line is the dollar. So basically a repeat of trends we've seen earlier in the week. But the movements this morning, I would say, are not really huge. Yeah, Luca mentions oil seasonals that are strong until late August. Yeah, we talked about that yesterday. We've seen that also last year, that oil prices were at the bottom around the turn of the year and then moved up in the middle of the year before falling down once again. Okay. So, yeah, okay, so that's it for today. Thank you very much, everybody, for coming. As always, the wrap-up for today and the preview for next week will be available as separate video clips. I invite you to join us for the GDP coverage, US GDP coverage later on today. Yeah, just in time to screw our holiday budget. Yeah. Yeah, thank you everybody for an interesting week. Happy weekend. Some of you will have a long weekend. Anyway, we'll be here on Monday. So anyway, have a great trading day today and a great weekend. Weather is quite good, at least where I am here in Barcelona. And that's it. So see you next week. Thank you and bye-bye.